Well, I don't want to give away anything in case somebody recorded it to watch later, but you don't get much more exciting football than the Super Bowl this year. And I didn't really have a dog in the hunt anyway, so it worked out. It was just fun to watch. Listen, but what I am is I'm very disappointed to hear that the Model Y refresh in the US will not happen in 2024. Three thoughts about that. Number one, the statement that was made by Tesla with regard to this did not say that there wouldn't be a refresh in Shanghai or Berlin, only that there wouldn't be one for North America. Number two, good to make a statement now so that they diminish the Osborne effect with regard to people waiting for that to happen. And then three, I'm curious as to why not. The only thing that comes to my mind immediately is that the change will be bigger than the change that they had on the Model 3, and it's going to take longer to get that change done. But who knows? That's all speculation, which is what we do right here on this particular channel. And what else is there to do? Okay, so this is Randy Kirk. Please hit like, subscribe, and notify, regular crowd tomorrow. Brian White at around 10 o'clock. Around 11 o'clock or so. And then Larry Goldberg at night. So you know you want to be notified about that. And then join Patreon and buy Cybertruck bottle openers. All right. The coming week is chock full of opportunities for market fluctuation. It is going to be a crazy week. So many things going on. Let's take a quick look here on this at the end of our rough day, maybe for some, and great day for some others. Let's start with on Monday, we have the monthly U.S. federal budget numbers. They're expected to come in with a big negative. No, you must be kidding. Down 21 billion is what people are thinking is going to happen on that one. I don't know if that's going to be much of a market mover. Okay, on Tuesday, we start off with the big stuff. So I'll be reporting on this first thing in the beginning of the day. We have the Consumer Price Index. The folks who have been asked about this all believe that it's going to be good, excellent. And we'll talk about this a lot more at the end of the show. So hang in there. I really think there's a lot of information you're going to want to know. And we'll get to that in just a second. But the pundits are saying that the headline number is going to come in at 0.2% compared to last month's 0.3. Core is going to come in at 0.3 compared to 0.3 last month. They're saying year over year going to drop from 3.4 to 2.9. It's the first time it's been under 3% since this entire problem started. And then the core CPI year over year dropping from 3.9 to 3.7. So all of that would be, of course, good news. If it's even better than that, we start to begin to wonder what's going on with the Fed in terms of not cutting, but we'll, again, talk more about that in a minute. Nothing happening on Wednesday, but on Thursday, we get to initial jobless claims. Everybody who's been polled expects that to be about flat. But that's what, again, I keep saying this, but I think they're just guessing at this point. The Empire State Manufacturing Survey comes in after that, and that was down 43.7 last month, expected to be down another 13.5. Philadelphia Fed Manufacturing Survey was negative 10.6 last month, expected to be 0.9 this month. The Import Price Index was flat last month, and they're expecting it to actually be trending down. Now, you would think that maybe the trend would be greater than that, given what's happening in China, where they have absolute deflation at this point, but I would have expected that to start impacting these import price indexes a little more than what they're showing. They also have the import price index minus fuel, and last month that was also flat, and either they're not taking a guess. I think that's what the little dash means. They're not making a guess this particular month. Then on the same day, still on Thursday, you've got U.S. retail sales, which were up 0.6% last month, expected to be down 0.2%, primarily due to lots and lots of weather in January. Retail sales minus autos was up 0.4% last month. They're expected that only to be up 0.3%, which I guess they're figuring a lot of those lost auto sales were because of the weather and that it didn't affect regular retail that much. Okay, maybe that's what they're saying. Industrial production, which was up 0.1%, expected to be up 0.2%. That's an interesting stat. That'll be interesting to see if that actually happening. Seeing industrial production moving up at that kind of a level would be quite a shock, I think, at this point. Capacity utilization, again, which we like to see at 80 or above, last month was 78.6, is now expected to go up a little bit to 78.8. And then home builder confidence, this doesn't shock me at all. Last month it was 44, and they're expecting that to move up to 46. I wouldn't be at all surprised if it was even higher than that. Everything right now is pointing towards a very good year for new home construction and sales. All right, then on Friday, we have housing starts. Last month, it was 1.46 million on an annualized basis. They're expecting that to go up a tad to 1.47 million. Not sure whether that might have to do again with weather, that it's not as much of an increase as might otherwise have been expected. On building permits, 1.5 million on an annualized basis last month. They're expecting that to go up to 1.52. That's one that I would be surprised that it's not even stronger than that. I would think that there's plenty of time and energy to be able to put the permits in at this point, and I would expect that to be happening. Then you get the producer price index, which is not as important as the CPI or the CPE, but it's just one more thing that the Fed does look at. And the only one they're making a guess on is the headline number, which last month was down 0.1%, expecting it to be up 0.2%. This is one where there's a lot of information which they can make a better guess on, but on all the rest, they're not making a guess. So interesting, this 0.2% increase seems high. I mean, it wouldn't be horrible. It wouldn't be a bad thing. That would be a 2.4% annualized rate at a run rate. So it wouldn't be horrible, but they're not making a guess at all on the core, which last month was up 0.2. They're not making a guess on year over year, which last month was 1% year over year. Let that sink in. If maybe you don't remember, 1% year over year, and core PPI year over year, last month was only 2.5. Again, no guess on those from the surveyed people. Don't know why that is, why they aren't surveying, or why they didn't come. I don't know. Don't know sometimes why they don't have numbers on these. Consumer sentiment last month was 79, and they're expecting that to pop up to 80, probably mostly because of the inflation being under control. So anyway, now let me just talk about all this inflation information for just another minute. It has been my stated opinion on this channel that the market has past worrying about inflation and past worrying about interest rates, and that we could begin to concentrate much more on earnings and on the gross domestic product. But the Fed seems to love the spotlight or something, and they have managed to steal defeat from the jaws of victory by holding off the reward for inflation data that met their very specific goals. We should be looking forward to an orderly 25 basis point drop in March, May, and July, potentially followed by more drops in the second half. But no, we are told that the Fed wants more proof that the lower inflation data is sustainable without so much as a speculation as to why or which elements of the CPI, PPI, or PCE are likely to undo the progress. What is it the Fed is worried about? The only thing that we know about is housing, the owned homes, not about rents. Even the Fed has said the rents are in great shape, and they're just taking time to go through in terms of being seen in the CPI. So it's only the owned homes. Of all the things, there's a couple of other minor issues, but other than that, everything is either even or down. So this week, we'll get those CPI and PPI numbers. And while the economists, as I just told you, what the polling shows, trueflation number is still for 10 days now under 1.5 at 1.35 today. It seems unlikely that even really good data is going to unlock the drops in interest rates, no matter what happens this week. And then we'll have another week and a half until we get to the PCE. But even then, I'm not sure that that's going to be enough good news for the Fed. We don't know what they actually need at this point. So I'm going to leave it there tonight. I had some thoughts about going through the entire trueflation again, but I'm going to leave. I'm not going to do that tonight. It's Super Bowl Sunday. Let's just leave it. Anyway, but I have one more thought for you. I generally wouldn't ask anybody that I care about to waste their time. But if you're looking for a quick mental exercise, there is another article in the Wall Street Journal, and it's titled "The Case Against Bill Ackman and Elon Musk's Anti-DEI Stance." Now, I read the whole thing. I cannot find a single point that even tries to unravel the case that's being made against DEI. Not a single thing. It lists the opposition, and you can guess who those people are. It sounds like a list of the most progressive organizations in the country, but there's not a single word, not one word explaining why DEI is not racist or is legal under the US Constitution, which are the two claims, of course, that are being made by Musk and by Bill Ackman. Well, maybe if you decide to read it, you could comment below and copy something from it, or tell me what you think is in there that actually responds to the title. The title is pure clickbait because it doesn't do what it said it was going to do at all. Anyway, let's take a look at where the markets are on this exciting Super Bowl day. We have got, just real quick here, we have got the bond market sitting at, whoops, I am still working on it here because things are getting in my way. We have got the bonds sitting at down 1 basis point on the 10-year on the yields. We have got the 2-year down less than, let's call it even. Pretty much all of the ones except for the 2-year, all the other long bonds are up that same, down that 1 basis points, and the shorter term ones are all unchanged. We have oil tonight sitting at down 44 cents at 76.40 at the top end of the range it's been in recently. You've got natural gas down even more, another 2.5% at 1.8 bucks. We have got the dollar easing a little bit. We have got gold down $1.90, but still right in the middle of the range, 2,036. We've got copper down 0.22%. Did I get that? Natural gas down? No, it was actually 2.5%. I did not say it wrong. Okay, and then crypto sitting at 48,150. Very, very, very strong right now. And then we've got the markets. The Dow Jones down 56 or 0.14%. We've got the S&P up 28 or 0.57% up. And the Nasdaq up 196.95 or 1.25%. What in the world is moving the Nasdaq like that? I didn't have time to check on that. Well, we'll find out in the morning if it continues to be up that strongly tomorrow morning. All right. That's it. Please like, subscribe, notify. And then earlier today, Cern Basher took me through some detailed charts and graphs that show the future of Tesla as an AI company specializing in robotics, which is what Elon Musk has recently said, not even for the last 3 or 4 quarters, has been saying it's an AI company specializing in robotics. What does that mean in terms of the future, in terms of the earnings, in terms of the future stock value, et cetera, et cetera? Cern Basher did a fabulous job. You can find that card right there. And after all of that, it's been great talking to you. See you in the morning.